Hey, I'm Palacios Jr, our Director of Research here at John Burns. With 2016 now in the books, we wanted to go through the exercise of examining how our forecast did actually from way back in January 2016. And the good news is that the majority of our forecasts actually were fairly accurate. I do really like to emphasize the fact that these are our forecasts. It's a huge process, not only from our research group, but also our consulting group. And then we also get a massive amount of value add from our wide variety of clients. So for our total housing construction forecast, we hit a bullseye. The full year turned out to be 1.16 million housing starts, and that's right in line with what our original forecast was back in January of 2016, compared to what consensus was calling for of about 1.26 million starts. So for us, that's a bullseye. So we forecasted 11% growth in single family starts, which is off a little bit from the actual 9%. We called for a 7% drop in multifamily versus the actual decline of 3%. And back in January of 16, the Wall Street consensus was calling for a 17% jump in single family and a 9% increase in multifamily, both of which were a bit too bullish. So for new home sales, we were originally forecasting back in January of 16 around 11% growth. Really accurate. Full year results turned in around 12% growth, so we're really happy with that forecast. So back in January of 16, Wall Street was calling for an 18% increase in new home sales, and industry groups such as NAHB were predicting 22% growth, again, both too bullish. So for our home price appreciation forecast, we were off a little bit on this one. So back in January 16, we were calling for about 3% price appreciation. Looks like full year 16 is going to end up around 7%. And I think what really drove that is that supply levels remained really low, much lower than we anticipated. I think there's a lot of markets where supply is below even 2 months of supply right now. And on the flip side also, rates were lower than we anticipated. So both of those things led to more price appreciation. So on our repair and remodel forecast, back in January, we were calling for about 7.8% year-over-year growth, and that turned out to be pretty well in line with what some of the larger companies in the space reported from a top-line perspective. And I think also, especially from our investor clients' perspective, one of the themes that we really picked up on early in the year was a pivot to some of the higher ticket price points, and that's something that was echoed throughout 2016 by names like Home Depot, Lowe's, as well as Fortune Brands. We're currently in the process of refining our 2017 forecast. For anybody that's interested in not only our national level forecast, but our regional as well as metro level, please reach out to me or visit our website for more information. Thanks.